Good evening, everyone. This is Mitch from HEREITFIRST.com, and today we will be looking at JCPenney, ticker symbol JCP. JCPenney was one of the best stocks to day trade from the end of 2013 to the beginning of 2014, even to the middle of 2014. However, I stopped day trading JCPenney right before their earnings in July, I believe. It's because I like day trading stocks on the rise or stocks that have strong fundamentals because worst comes to worst, I can hold those stocks. Um, so let's take a look at JCPenney. Once again, I use stock charts because I like the way it's basic and simple. So I get a general view of the stock. The indicators right now are the moving averages 50 day and the 200 day, and I've used the Bollinger Bands. Um, Stochastics, which I always use, MACD, which is just there. For those that are trading JCPenney, what I would do is that I would wait till these Bollinger Bands pinch because I do not want to get caught in the volatility. I would rather wait till the stock stabilizes. So, for example, I would be trading the stock from here to here, but once it opens up, um, I would get out of it. Think of it as a floodgate opening. So now that we have the general view of the stock, just remember the 250-day MA. It's just good to have it in your head. I just don't like it in my trading view analysis because it just makes everything cluttered, and we never want that. So in this chart, we're using volume, the exponential moving average, the 8-day exponential moving average, which is the most important one, which is called the T line. The simple moving average, which I use the 4-day, and the parabolic SAR, which I leave on default. Stochastics is on the 20. Even though it's oversold, I will tell you why I am not bullish. Um, so first off, basic support lines would be the $7 range, which would be over here. I guess with the settle on 701, and this was support for the stock for a good month before it broke. Um, Next support line, which it just recently broke again, which is why I'll explain why I'm bearish now. If this line held, the 670 line, if the 670 line held and the stochastics were right at 20, I would be bullish. However, um, it dipped underneath this line, and when it breaks level support, I don't care what stochastics say. I would not touch this stock if you are a bull. If you are a bear, you must be loving this chart. Also, the parabolic SAR is also signaling a bearish run. The parabolic SAR, excuse me, is an indicator that I use, which I got from Superstorm Stocks, my good friend who trades penny stocks. Make sure you give him a follow at Bureau Wall Street. He's on Twitter and Instagram. So the parabolic SAR indicates trends. So if it's underneath the candlesticks, that means it's bullish. If it's above the candlesticks, that means it's bearish. So as you can see here, JCPenney is starting its bearish run. This is just the 6-month view of JCPenney. So basically, just remember this. This $7 was already broken. So next support line was 670. That's already broken. So JCPenney has already broken two important indicators during this time. In terms of support resistance, I would say I'm gonna change the colors just so you guys don't get confused. I'm gonna put it in green. So this would be resistance 1, and resistance 2 would be, this is resistance 1 at 780, and resistance 2 would be this gap over here, which is around $8.10 or 15 cents. So remember, resistance 1, 7 in the 770s, resistance 2 in the $8 $8 range. Also watch for this gap because gaps usually tend to fill. So if JCPenney bounces, which it doesn't look like it is for now, it will most likely fill this gap and test resistance in the zone. Just remember, stochastics is a good indicator if there's support at that level. If there isn't support at that level, I would throw stochastics right out the window. For stochastics, I use parameters 1233. I think it's 1433 for default, but it's always good to play for settings. This. Get rid of this. Okay, there we go. Yeah, I got rid of that line, but you guys already know that resistance is around this area. So now let's look at the 1-year chart to find another area of support for JCPenney, just because it already has broken this line. So if JCPenney were to fall, this line over here, which is a 615 to 618 line, will be the next area of support. I'll make this line red. And 620 could be tested very easily, in my opinion, just because of this gap over here. So if you're a JCPenney bear, you must be pretty excited. If you're a JCPenney bull, you must be pretty scared. Good luck trading. Sorry about that. My mic was acting up. Where was I? Yeah, if you were a bull, I would definitely be wary. If you were a bear, I would definitely be excited. I hope you guys enjoyed the video. If you found this video helpful, please drop a like or subscribe for more.